What's up guys, before we get into this video I just want to say we're doing a 30% discount off my course running up until Monday. If you are interested, head over to my Twitter and we'll get you started as soon as possible. My Twitter is Louis_crypto, and yeah, there's a link to it down under below this video. Please like, please subscribe, comment, turn the notification bell on for here and over on Twitter as well. Thank you guys for supporting the channel. What's up YouTube, it's Louis here. I'm finally back with another Hbar update. Apologies that I wasn't able to make one in the last 2 days, but what a crazy last 2 days. The crazy announcement that Hbar is officially listed on Coinbase, but not only that, the CPI data. I hope you guys been keeping up with the Bitcoin updates, as that is the most important coin. If that is bullish, this is bullish. If that is bearish, this is bearish. It's simple as that. So if I'm not making a Hbar update, I really do appreciate if you do continue to support this channel, helping with the algorithm by liking, subscribing and commenting, turning the notification bell on and watching that Bitcoin video. Make sure to check out my Twitter as well. I do make posts during the day over there if I haven't made a video. But yeah, crazy ton of events. Make sure to check out today's Bitcoin update as well. But yeah, we hit this technical target out of the double bottom, which is amazing to see. We did actually manage to hit the 618 as well. So it's nice to see that what basically we said on the channel has come to fruition. Now you can see we came straight through all of these EMAs. That's very negative. If we had closed down here, it means the bullish move was just a fake move to the upside. Now this is quite common in a bear market, or what I've been telling you guys over months now, maybe even over a year now, is that we're in a manipulated market. In a manipulated or bear market, bullish patterns are not going to work. They might actually hit the target, but doesn't necessarily mean after the target it's going to continue on and on and on. Only once we go back into a bull market you will tend to see this. So for example, in a bear market you might see a W pattern like over here. We've come down, one bottom, second bottom. You come to the neckline, you actually broke out but fell back under. So you did not meet the target, but you did break out, but failing to actually continue afterwards. So this is why it's because we're in a manipulated market. Bullish patterns will either work in the short term. You might meet the target like this. However, you might not carry on basically because we're in a manipulated market. Sometimes you might not even break the neckline and it was never even a W because you never validated it. This is the problem. So in a bull market, it's the opposite. The M patterns, the head and shoulders patterns, all the double tops, whatever you want to call them, all the bearish patterns, they might not continue lower. So after it meets this pattern's target, so for example, let's say we're in a bull market and higher highs and higher lows, and at this higher high you might see an M pattern. Doesn't necessarily mean you're going to a bear market. You could just come back down to here or back down to here, a much deeper correction before continuing back up, and that becoming a double bottom inside a bull market. But you needed the M pattern to send you back down for that second bottom. Okay, so the same in a bull market, basically. The same in a bear market. Just because you're seeing a W like that doesn't necessarily mean we're going to fly off into the sky. You might just meet the target, as we've seen over here, but doesn't necessarily mean we're going to completely reverse. As over here you see an M pattern, doesn't mean we're going into a bear market like this. You might just be coming back down to this low to continue up higher afterwards. Okay, so the same here, didn't break out here as well. The risk is with yesterday's candle, let me just get rid of that for now. I'll go back to where we were. So the risk with yesterday is that we closed below all these EMAs over here, and that basically means that the move to the upside was fake because we're in this bear market, manipulated market. You had this W, the bullish pattern, you met the pattern's target. With the risk now, we're going to continue this downtrend. That's what should happen if we are in a bear market. If we're not actually bearish, then this might not be the case. If we're actually bullish, which technically Hbar is, as long as we're above this low, then what we should expect is now we're falling back to key support. Hold this key support as we said in the last video, and then attack this gold box, confirm that support, and we'll go and attack these highs. And basically you'd be on your target to 8.5. You'll be on your way to 8.4 cent, 8.5 cent, and that's only if we can now continuously hold the 1 fib level of 0.057, as well as the double bottom neckline over here at 0.61. Again, if we do ever lose the 1 fib level, we come down, lose the EMAs and the 1 fib level, we're coming back down to the 1618, and then potentially to this target, as it is the target out of this larger head and shoulders, which we're now trying to invalidate by obviously holding these EMAs as support, something that we've actually not been able to do for a very long time. We got above them over here, and when we got above them, we couldn't confirm it as support. We fell straight back under, flipping the EMAs bearish. When these EMAs flip bearish, it was so correct to prepare for this, but not directly tell you guys we are 100% going down. Because I like to tell you guys, as long as we're above this, the last level, the level where we actually flip this bearish trend into a potential uptrend, you just need to hold this low. So we came back to that low and we were playing around with it, but we're now trying to actually head higher. If we can actually break above this gold box after holding this support, then yeah, we're going to actually try and take this out. You can see that's a much larger double bottom forming on the larger time frames. Not only that, because we're seeing an inverse head and shoulders on many coins, like the one that Bitcoin may potentially be breaking out of soon, but the one that Quant has already broken out of, we're seeing it over here for Hbar as well. Shoulder, head, shoulder. It's also a double bottom as well. If we can continuously hold that 1 fib level right there, it's all about that point. And if we can hold that, which we are, break above these EMAs, which we have, hold them, which we're still yet to do today. We actually did do it yesterday because we were below, but we closed back above. So technically you have held them. That is extremely bullish for Hbar. What you're doing today is trying to test it one more time. If you can hold the 55, that is amazing. Next is to break above this, and if you're to break above this and confirm this is support, continuously hold it, close a daily candle above it, come back to it, hold it, or just wait for a daily candle to close above. And as long as it stays above the 618, which is this resistance, which should now act as support, as long as you can stay above this, once we are above it like that, then we're going to continue to 8.5 cent. That'd be a nice trade. That trade could potentially be in and around 25% without leverage. You need to realize, guys, you don't really need leverage, especially in these manipulated markets where you can get wiped out, and we don't want that for anyone here. I want to bring your attention to the fact that we're running a discount only lasting until Monday, 30% off my 6-hour long 30 plus video course, teaching you from someone with zero knowledge to becoming a master at trading. It's all explained again from beginner, going through psychology. More information, if you want to message me, that is over on Twitter. Just private message me there. That is lasting until Monday. I also have slots available on the one-on-one mentorship where I teach you one-on-one after you've done the course. But yeah, that's pretty much it. I'll catch you guys in the next Hbar update. Let's see if we can hold this double bottom neckline, hold these EMAs, because right now Hbar is technically bullish on the daily time frame. The only thing standing in its way is this before we're actually heading back towards 8.5 cent. But there would be nothing wrong as long as today's daily candle closes above these EMAs to be already in a long, as long as you've got your stops set below this 1 fib level here. Thank you guys. I'll catch you in the next one, and as always, peace.